What's up traders, and welcome back to the channel. I'm back with another video to show y'all a trade I took during the New York session this week on Monday. This was a clean trade where I was able to follow my plan all the way through. I was anticipating price to trade back into an important PD array before hunting my setup. The PD array that I was observing was a daily fair value gap at 1.06152. So I'll show you that's this right here. This was the fair value gap on the daily time frame, but for recording purposes we'll just stick to the 1 minute time frame. In this case I was looking for price to take out previous week high, creating a stop grade followed by a market structure shift and displacement. So we can see here this was the go back, or let's go to the 5 minute real quick. So yeah, we see here previous week high, and then during the session price took out that previous week high, creating a stop rate. That's where I marked up right here. Yeah, I'll go back to the 1 minute time frame. So now that we're here, yeah, so price took out that previous week high, and since I seen that and I seen the stop rate, I was anticipating the market structure shift. So we'll see right here, price took it out, wicked it out, dropped below, but I still was looking for that market structure shift. So this was the short-term high, so price indeed took it out with the market structure shift. This right here is the displacement candle, and basically a displacement candle, for those who are new to the channel, is displacement is a sudden change or sudden drop, a strong movement in delivery. So it's usually a strong volume candle, so I like to see that basically. So displacement basically is a strong volume candle that I like to look for when market structure shift has been created. So yeah, this is the displacement candle. Price indeed took it out. So now here we have a fair value gap that needs to be tapped into. But before I go into detail with this, I did want to draw to you guys' attention that this yellow shaded area is a 15-minute fair value gap. So I just marked that up for additional confluence, just to give my trade setup more confluence and make me know that this is a trade that I'm confident taking. So now that these elements were present at the right hard edge of the market, I eventually took the trade with confidence because, like I said, there is a fair value gap right here, also known as a CIVI, which is sell side imbalance, buy side inefficiency. So I marked it up. This is the 1 minute fair value gap. Did a market execution. I didn't do a sell limit. Since I was right in front of the charts, I just wanted to see how price is going to react. And later you'll see in the video that it's pre-recorded. You'll see how I was able to take the trade. So yeah, entered at 1.06123. That's where entered at 1.06123, and we can see here my stop level was at 1.06160, so just above the structural high. I didn't put it above here or here because I thought if this trade was invalid and it was gonna take this, it might as well take this and this. So I thought this was appropriate, just for R to R purposes. We entered, price did drop, then came back to my entry. I could have added another entry, but for risk purposes, I didn't. I just left it as it was. Only risked 0.5% on this trade. You don't need to risk a lot with trading, especially with Forex. That's the power of trading. As long as you understand and respect the value of R to R, you'll be able to, reap the rewards. Yeah, traded up, dropped back down, traded back again, and then traded down again, and then traded right back up. So yeah, 2 opportunities to go short again. I just left it alone. After the third attempt into the fair value gap, price just dropped nicely into my discount amount. So this was my first partial at take profit. This is also known as a internal range of liquidity because it's still inside the trading range. So price indeed did that. It did trade back up a little bit. So for those who aren't really adept or understand trading well, the retail Ricks of the world, you would think, oh, price is gonna start buying back up and going long here. But that's, if you don't understand bias and you don't understand narrative and where price is actually going to, you won't truly understand what's going on. So in the market, what's going on in the market. So I wasn't too concerned about this. I knew price was gonna break below and then continue to my other levels of liquidity. So yeah, price did break below this discount imbalance, traded back up. We have another opportunity to go short here, and this I'll mark it up for you guys. This fair value gap, I give it yellow. Yeah, and I'm not the best with colors, so not to forgive me if you guys aren't really fond of my color choices. But yeah, so price dropped, got this nice fair value gap, so you could have went short here 1, 2, 3, 4, 5. So could have went short 5 times if you really wanted to, but one will do it. So price then hit below this draw of liquidity. This is a level that I call external because it's breaking outside. I mean, it's technically still inside, but because it is a draw liquidity, I like to consider it outside. And then price did trade back up again, and then missed this equal lows, the sell side liquidity, just by a little bit before running up at the end of the session. But nonetheless, profit was taken, partials were secured. The trade was risk free, so overall it was a good trade. A lot of things that I was content and satisfied with this trade. So yeah, just for number of purposes, took partials around just the top of this imbalance level, so 1.0630, and obviously partials right here at 1.05951, and then just a little bit below, but by then the trade was already risk free at break even, so I wasn't too concerned. I'll let you guys watch the trade as I pre-recorded it live. If you have any questions, comments, and or concerns, drop them below in the comment section. As always, share the video and subscribe as it helps for the success and growth of the channel. Enjoy. Signing out. Chosen.